A very good afternoon, guys. Continuing with FA6, today we take the next chapter, that is valuation of goodwill and shares. In terms of number of sums, in this chapter we are going to solve the highest number of sums. Around 55 to 60 sums will be solved. The reason is because when I say valuation of goodwill and shares, this is as good as two chapters. This chapter is divided in two parts. Part A, valuation of goodwill, and part B, valuation of shares. When we come to the second part, in addition to valuation of shares, there will be again repetition of sums where there is goodwill calculation also. That we will see later on. Today, let's focus on the first part, that is valuation of goodwill. Now, right from FIJC, each and every year, you all have heard the word goodwill. What exactly do you mean by goodwill? Goodwill, you all know it is an intangible asset. It is nothing but reputation of the business. Goodwill is reputation of the business which is valued in terms of money. Goodwill is reputation of business valued in terms of money. You all have done SYGC may admission, retirement, death. T.Y.BAF may all have done final accounts inclusive of admission, retirement, death. This year only, you all have done amalgamation of companies where you all, while passing the entries in the books of new company, difference in half the cases went to goodwill. So goodwill is valued at the time of takeover, amalgamation, absorption. In case of partnership firm, at the time of admission, retirement, death of partners. Everything is given in the theory. Now coming to goodwill. When I say value, how do you find out the value of goodwill? How do you find out the value of goodwill? Now the first part, valuation of goodwill. There are three methods. There are three methods of goodwill. One is average profit method, which we are going to start today. Average profit is further divided into two. First, simple average. Second, weighted average. I repeat, first method is average profit method divided into simple average, weighted average method. Second, which has got the highest number of sums, that is super profit method. And third is called as capitalization of FMP. FMP is future maintainable profits. That when we come to the second method, we will see in detail. So in short, three methods: average profit further divided into simple average and weighted average, super profit method, and future maintainable profits. Capitalization of future maintainable profit. Now listen, whichever method you do, when I say goodwill, it means reputation of business. They will give you the past history of your profits and losses along with adjustments. What you have to do is, you have to consider those adjustments, and depending upon the method, the first method is based purely on profits and losses only. You have to find out that profit or loss which is genuinely related to your pure business activities. When I say incomes which are related to your business activity, that means it should be such that it is a part of your day-to-day business activities. If you have earned any income which is not connected with your business activity, then that cannot be treated for valuation of goodwill. Say in my case, I am teaching you all, I come in the coaching industry. I teach students, the fees what I get from my students, that is my regular business income. Suppose I invest my surplus money in bank fixed deposits or shares, profit what I get, dividend what I get, interest what I get, that will be my income, but that is not my regular business income. So regular business income is called as your trading income, and the income what you get which is not regular, that is called as non-operating income. Trading income is also called as operating income. Let's use the word operating because the income which is not connected with business, we will use the word non-operating. So two types of incomes and expenses. One is operating income and expenses and the other is non-operating income and expenses. Again, coming to the same point, operating means that which is connected with your regular business activities, and non-operating is that which is not connected with your normal business activity. I give you my example. Now sometimes in business, you sell assets. Now unless and until assets for you is goods, then it is your normal income or loss. But suppose you are into some other business, you have fixed assets which you are discarding at loss, then that profit or loss on sale of assets or sale of investments, that is not your normal business activity, so that cannot be treated as a part of goodwill. So in short, the profits or losses which I take, for the purpose of valuation of goodwill should be such that they are connected with your day-to-day business activities, and you will get it in the regular course of business. Some incomes and expenses you may get one-off, but if they are connected with your business, it's fine. But if they are not connected with your business, they are non-operating in nature, then you cannot consider. Even losses, you sell investments. If it is your business investment, you have kept money aside to buy some business asset, then it is called as trading investment. But if it is a non-trading investment, non-trading means you have just invested a surplus money, then in that case, the profit loss what you get, that cannot be considered as a part of your day-to-day business activity. Okay, now see, as I told you, first part, valuation of goodwill. In that, first we will take method number 1. Method 1, that is average profit method, and in that we will take the first part, that is simple average method. The second one is weighted average. To do weighted average, first you should be thorough with the concept of simple average. As the name suggests, simple average, what you have to do is, you have to get the average of your profits loss. But what we discuss right now, the profit loss should be such that it should be a part of your regular business activities. What are a part of business activity, what not, I gave you a brief, but when we do the sums, that time I'll tell you in detail. What you have to do in simple average is, get your adjusted profits. Adjusted profit means, they will give you the profits according to the adjustments. According to the adjustment, get the revised profit or losses, take uska average, they will give you number of years of purchase. According to that, you will calculate the value of goodwill. Okay, now the first two questions of this I have made of my own. You all have the picture in front of you below the video. You all can refer that. Okay, let's start. I'll show you in the sum only. Entire theory is given to you all method wise. As and when we proceed, we will keep on discussing. Let's take the first question. Okay. Mr. A agrees to purchase the business of Mr. B. For this, goodwill is valued at 3 years purchase of the last 4 years adjusted profits. The profits for the last 4 years are as follows. They have given 2019 ka profit 1 lakh, 20 ka 250, 21 2 lakhs and 22 1,50,000. Now see, the above profits have been arrived after the following adjustments. Loss by fire 20,000 in 2019. Lottery prize received 1 lakh in 2020. Prize of 50,000 received from KBC contest in 2021. And loss by tsunami 75,000 in 2020. Now, they have given us 4 years ka profit. We just cannot take uska average. According to the 4 adjustments given, we will have to adjust the profit. Okay. So first we'll have to make the table where you will give the heading calculation of adjusted profits. You will give the heading calculation of adjusted profits. There are 4 years, so your heading will be particulars and the 4 years what they have given. The length of the table will be around 7 lines, 6-7 lines ka table. Particulars, the 4 years. Which are the 4 years? 2019, 2020, 21 and 22. Okay, I'll repeat. Heading will be calculation. Okay, just write like that. Calculation of adjusted profits. The original profits which are given in the question, that profit we will adjust according to the information given in the question, and then we will find out the value of goodwill. Okay, so particulars and 4 years, 19, 20, 21, 22. Now, what we will do? First, take the profits or losses which are given in the question. All 4 years are having profits. Okay, so below particulars, write their profits. Below particulars, write their profits. I just gave you a gist in the explanation. Now in the sum we will see the detailed calculation. First, write the original profits as given in the question. 2019, it was 1 lakh. Okay, then 20, 2,50,000. 21, 2 lakhs. 22, 1,50,000. Okay, I'll repeat. Take the original profits as given in the question. 2019 ka 1 lakh, 20 ka 250, 21 2 lakhs, and 22 1,50,000. Now listen. One by one, see the adjustment. They have given you the profits have been arrived after all the addition and deductions according to the adjustments given. Now listen. Loss by fire 20,000 in 2019. Now you all have done this in T.Y.BAF Management Accounting Vertical Financial Statement. Loss by fire is a non-operating expense. See, fire is not going to take place every year. It's an accident. You cannot say it is a regular business activity. Now tell me first, now understand this, what I am trying to tell you, because this will be the base for the entire chapter, not only for goodwill but shares also. Your loss due to fire is 20,000. Now see, loss by fire, you will debit to P&L. Now see here, it is for which year? 2019. 2019 ka profit is 1 lakh. Now there was a fire because of which the loss was 20,000. Now this profit is arrived after deducting that loss of 20. Is that 20 ka loss a regular loss which is going to appear again and again? No. So what you'll have to do? I'll have to adjust. So what happens if there are non-operating expenses? Your profit is arrived after deducting the expenses. So to get back to the original profit, add it back. So loss by fire is not my genuine business transaction. It is an accident which happens rarely, not a pure business activity. Because of that loss, my profit of 2019 has come down by 20,000. So I will add it back. So what do you do? Add back. Add loss by fire. It has happened in 2019. So just put it in the column of 2019 and remaining 3 years nil. Just put 2019 में 20,000 and remaining may nil. Okay. Next, lottery prize received 1 lakh in 2020. Now see, lottery prize is a bonus income for you. Has lottery prize got anything to do with the business? It is just your bonus personal income. Now listen, when I debit the loss now, my profit comes down. So to go back to the original profit, I add it back. Now this is my lottery price, it's my income. When you get income, whether it is operating or non-operating, your profit includes that income. So now what you will do, this 2,50,000 includes 1 lakh ka lottery price. Has it got any connection with the business? No. So that is non-operating. So what we will do, that is not going to come again and again, and anyway even if it comes again and again, it is not a business activity. So reduce it, less lottery price earned in 2020. So deduct from 2020. Those who are confused, you can put a bracket also, or less ka sign is more than enough. Getting the logic, guys? So there will be few expenses and incomes which will be added, few which will be subtracted. As and when we proceed towards the chapter, you will keep on getting it. Clear? So less lottery price 1 lakh, you will deduct. Again I am repeating, why you will deduct? Because this 250, now see, just understand now. Had I not got this lottery price, 250 minus 1 lakh, my profit would have been 150. Now because I got the lottery price, 150 plus 1 lakh, my profit became 250. I want pure business profit. So that income expense which is not connected with the business, I will adjust it. So that is the reason I am deducting. Same way here, if this loss would not have been taken place, my profit would have been 120. But because of the loss, 120 minus 20, my profit came down to 1 lakh. But that loss was non-operating. So I add it back. Now once you get these two, the third and fourth are straightforward. What is the third one? Prize of 50,000 received from KBC contest in 2021. Kaun banega crorepati? Nothing to do with the business. It's like your crossword puzzle type ka income. No connection with business. Your 2021 ka profit is 50,000 more. So remove it. So write there. Less prize in KBC contest 50,000. Prize in KBC contest 50,000. Okay, you will deduct or add in the year to which it belongs. Later on, there will be few income and expenses which will be connected with each year. That we will come slowly to that. Next, loss by tsunami is 75,000 in 22. Again, tsunami, what it is? Natural calamity. Loss by fire, similar to that. It won't happen again. So that loss. So this profit of 150 has been arrived after deducting the loss by tsunami. So what I do, to get back to my original profit, I will add it. So add loss by tsunami. It is only affecting the last year. So add 2022 May 75,000. Add 2022 May 75,000. What it, guys? Now see. Now before we proceed further, before that, take the totals of each column after adjustment. Be careful where you have added, where you have subtracted. Okay. Sometimes students make a mistake of instead of adding, they deduct it. 2019, 1 lakh plus 20. 120. 20 में 250 minus 1 lakh. 150. 21. 2 lakh minus 50. Again 150. And the last 150 plus 75 gives you 220. Getting it? So guys, see, the original profits given in the question, after the 4 adjustments, after considering the 4 adjustments, all the 4 years ka profits have changed. What we have done is we have made adjustments. What is your heading? Calculation of adjusted profit. So against this revised profit, use the word adjusted profits. Adjusted profits is nothing but another name for revised profits. Adjusted profits is another name for revised profits. Clear? This was the main part of the sum. Of course, the sum is not yet over because you are yet to calculate the value of goodwill. But when I calculate the goodwill, the profits which I will consider has to be the revised adjusted. Now see, what is the method of goodwill? See the starting part. At 3 years purchase of last 4 years adjusted profits. If it is weighted average, they'll mention it. When we come to the sum, that time we will see. So now what you have to do, the next step, we have to get the average of this. Okay, just let me check the angle of okay. Now my next step will be to get the average adjusted profits. Now see how you will get. How many years are there? 1, 2, 3, 4. So first step is get the average. Now when I take the average, it won't be this. It will be the average adjusted profit. It will be the average of the adjusted profits what I got. Okay? Take the next step. Below the table if you all have space. Right. Average adjusted profits is equal to, put the formula because it's a board exam, total profits minus total losses divided by number of years. Okay. Average adjusted profit is equal to total profits minus total losses divided by number of years. Now see, all the 4 answers are positive. That means profit. Okay. So add all 4 of them. So 120 plus 150 plus 150 plus 225, and the number of years there are 4, so divided by 4. So 120, 150, 150, 225, 645 divided by 4. $161, 250 is your average adjusted profits. Okay, remember the profits have to be after adjustments, because if it is before adjustment there is no need. You all have done in FA6 similar sum, but that was just basic. They gave you the profit loss. You were just supposed to add and multiply the number of years of purchase to get goodwill. But here it will be in detail. Got it? So this is my average profit. Again, the sum is not yet over. Last step, we have to calculate goodwill. Goodwill ka valuation depends upon the method. As I told you, we are in the first method, simple average method. Now see, how many years purchase? Goodwill is valued at 3 years purchase of last 4 years adjusted profit. This is my adjusted profit. So now my last step, goodwill is equal to average adjusted profits multiplied by number of years of purchase. Now see, when I say number of years of purchase, that means that years where the profit cut trend is expected to go. That means my average profit is 161,250. Next 3 years, because the number of years of purchase is 3, it is expected to be in the same range. So now it is what? Average adjusted profit 161,250 multiplied by the number of years of purchase 3. So 161,250 into 3, 483,750 is my final answer. That is goodwill. So this person, when he sells his business or when he gives it to somebody else, or for any reason there is a change in the constitution of the business, his valuation for goodwill will be 483,750. If he sells to somebody, in addition to the normal value of assets and liabilities, he will get 483,750 towards goodwill valuation. Got it, guys? This was the base. So first method, first sum, simple average method. First method where there are around 5 to 6 sums, of course covering both simple as well as weighted average. Okay, first around 3 to 4 sums are based on simple average and another couple of sums on weighted average. Later on, when we go to valuation of shares, again the sums of goodwill will be repeated. Okay, let me check the duration of the video. Okay guys, I can continue the next sum. So I'm just pausing the video and the next sum I will continue in this video. Okay guys, continuing the video with the second sum. Let's see. Mr. C agrees to purchase the business of Mr. D. For this purpose, goodwill is to be valued at 2.5 years purchase of the last 5 years adjusted profits. The profits for the last 5 years are as follows. They have given you 18, 19, 20, 21, 22 profits. The above profits have been arrived after following adjustments. Loss by theft 10,000 in 2018, 25,000 received from horse racing in 19, loss by earthquake 40,000 in 20, 15,000 received from betting of cricket matches in 2021. Now see, the first 4 were almost same type. Now 5th and 6th are a bit new. Machinery was purchased on 31st December 22 for 50,000 and was wrongly debited to P&L. 6th one, Mr. D had appointed a manager in 2018 at a monthly salary of 2,000. Now these services will not be required. So 5th and 6th are a bit new. Before that, let's finish off the first 4. Same table, first part, calculation of adjusted profits. There are 5 years ka profits. So particulars 18, 19, 20, 21, 22. Okay, let's take one by one. First adjustment. Now I've already written the profits. Okay, loss by theft 10,000 in 2018, first year. Loss by theft. Again, it is not an expense which is a regular business activity. It is a one-off transaction which may sometimes happen. So because of that loss, your profit has come down. So add it back because it's not a normal operating expense. So add loss by theft, that is 10,000. Add loss by theft 10,000. Second, 25,000 received from horse racing in 19. Horse racing income has got nothing to do with your business activity unless and until you are into that business. So 25,000 is horse racing ka income which is earned in 19, not a business activity, so remove it. Less horse racing income or horse racing. Since it is connected with 19, you will deduct from the year 2019 only. So 2019 में 25,000. Third, loss by earthquake 40,000 in 20. Earthquake, again like the previous some natural calamities of similar to tsunami. So that is a loss which will not occur again and again. So add loss by earthquake, that is 40,000 in the year 2020. 40,000 in the year 2020. Clear? Next, 15,000 received from betting of cricket matches in 21. Again, speculative income, no connection with normal business activity, so remove it. Less income from betting in cricket matches, or you can just write income from betting. No connection with business income, so remove it from the fourth year, that is 21. Just be careful of what you have to add and what you have to subtract. Now guys, see, these first four items were more or less same as compared to the first sum. Now see the fifth point. A machine was purchased on 31st December 22 for rupees 50,000 and was wrongly debited to P&L. Now listen, when I say my profit loss, it has to be profit loss from normal operating activities. Now, you have purchased an asset. Here it is machinery. Now, normally what we do, you all are doing since FA6. When we buy an asset, machinery, say for example in this case, we will debit machinery. And what we will do, every year at the time of preparing final accounts, we will deduct each year card depreciation from the relevant year. Now what has happened? They have purchased a machinery. This is more like a mistake. Error made in accounting. So when you value goodwill, not only your operating expense and income ka adjustment is made, or non-operating income and expense ka adjustments are considered, we also take other arithmetical errors or other factors because of which the profit loss is giving a different picture. Same thing here. You have bought a machinery on the last day of the last year. Later on we'll see the sum where it is bought in between, then there will be depleca adjustment, but I have purposely kept it very basic in this sum. Where should machinery go? Machinery should go on the asset side. I have purchased on the last day of 22. So can I say if I am purchasing on the last day of the last year, there is no question of any depreciation. So it should go on the asset side. Now understand this. What they have done, instead of putting it on the asset side, by mistake they have debited to P&L. Instead of putting it on the asset side, by mistake they have debited to P&L. Now can I say by mistake they have debited to P&L? So because of this transaction, your profit has come down by 50,000. Debit P&L means you have shown it as an expense. So when expense is more, profit will come down. So this is an arithmetical error because of which your profit has come down by 50,000. So in order to bring it to a correct value, we have to add it back. Remember, we added loss by theft because it was a non-operating expense. We added loss by earthquake because it was a non-operating expense. But this is not a non-operating expense. It is an arithmetical error, accounting error, where instead of showing it as an asset, by mistake you have shown it as an expense in P&L. So because of an expense being shown in P&L, your profit has come down, so add it back to get the correct profit. So what you will do? Add back, add purchase of machinery and add it in the last year, that is 50,000. The same adjustment we will see in the next class, where we will add this in between and then every year there will be debiting. But in this sum, purposely I have adjusted the date so that it is last day of the last year. Got it, guys? Now listen very carefully. See the last adjustment. Mr. T appointed a manager in 2018 at a monthly salary of 2,000. Highlight that, monthly salary. Now his services won't be required. Now listen very carefully. When I value goodwill, we not only consider past profits, but we also consider future profits. We not only consider adjustment of past profits, but we also make prediction of future profit. Now listen, as I told you starting, there are three methods of goodwill. Now which to follow? There is no legal rule. It depends upon the understanding between the buyer and the seller of the business. Some factors buyer will insist, few factors seller will insist. So depending upon the mutual understanding, goodwill ka valuation is done. Now what will happen? Buyer may insist on these adjustments. Seller may insist on the future adjustments also. Now see what has happened here. Currently the person who is selling his business, he is appointed a manager. He is paying him 2,000 per month. So full year ka 24,000. So his profit has come down by 24. Now the new company which is going to acquire, Mr. C, he doesn't need the manager. So can I say he will be saving on his salary? So what will happen? Because of his savings, the profit also will be higher. So he may also insist. So as I told you, it will depend upon mutual understanding between the buyer and the seller. So now what will happen? There will be a saving due to the removal of manager. 2,000 per month. 2,000 per month, that comes to 24,000. Every year 24,000 has been paid. Every year, starting from 18. Every year 24 is paid. Now, the services are not required. So what the seller will say? You don't want the services. So now you will be saving 24,000 per year. So I need that share also. So that will be adjusted in goodwill. Now listen very carefully. This adjustment applies to all the years. Now when there is a see what happened? Previous sum and in this sum till here, we adjusted only one item in each year. Now this adjustment is going to affect all the years. So understand, there are two ways of doing it. First, if it is connected with all the years, put it in the table in all the years, whether addition or deduction. Or other way, close this, take the total, get uska average, make the adjustment in the average. Because what will happen? Here you will write 5 times, end may the total will be divided by 5 only. Other way around, take the average and then add it or subtract it once. What we will do, since we are in the table, let's finish off here only. I'll give you a note also for this. So now, the manager is removed. So because of that, there is a saving in salary. Now remember, this is not a non-operating expense. This is a saving in operating expense. Okay? As I told you, it is not necessary that every adjustment has to be non-operating. See here, this was accounting error. This one is saving in operating expense. Okay? So right there, add saving in manager's salary, 24,000 you will put it in all the 5 columns. Again I am repeating, even if you don't do this, take the average after adjusting the first 5 adjustments, and to that average add 24,000 once. You will get the same answer. After the sum, I'll give you a note for this. Okay guys, so how you got 24,000? I'll just put it in brackets in the first year. It is 2,000 per month into 12. Okay, that's it. Let's take the adjusted profit cut total. 80 plus 10 plus 20. 1,40,000. 1 lakh 99. 194. Be careful what you are deducting, what you are adding. 120 minus 15 plus 24. 150 plus 74. That is 220. Okay, 90, 114, 75, 99, 170, 194, 105, 129, 150, 2 lakh, 220. Got it, guys? Okay. This is my adjusted profit. Okay. Now, the next step, we will take the average of that. Okay, we will take the average of that. Next step. Average adjusted profits is equal to total profits minus total losses divided by number of years. So 1,40,000 plus 99 plus 194 plus 129 plus 224, and it is 5, so divided by 5. So 1,14,000 plus 99 plus 194 plus 129 plus 224 gives you 760. Number of years is 5 divided by 5. You get rupee 1,50,000, which is your average adjusted profit. So my average adjusted profit is 150. And the next step, goodwill. Goodwill is equal to average adjusted profits multiply by the number of years of purchase. So 152 into number of years is 2.5. As I told you, number of years of purchase means you are going to expect this profit to continue at least for another 2.5 years. Now have the calci, so 2.5 ka calculation is very simple, and therefore goodwill in this case is valued at 380. So this person who's selling his business, understand the logic. In addition to the money which he gets for his assets and liability, he will get 3,80,000 towards the value of goodwill. That's the logic. Okay. Now, as I told you, I'll give you a note for this. Just take a small note of around 3 lines. Okay, so we'll just write that we have given alternate presentation. Note, the saving in manager's salary, has been added in the above table, for each year.